Hello everyone, this is Jennifer. In this video, we're going to look into the full-fledged problems on presentation of financial statements. So this is quite a very huge problem. So let's look into each aspect very clearly. So from the following trial balance, prepare final accounts of Nishi Trading Limited for the accounting period 31st March 2016. So if you see your trial balance that they have given, it shows that we are supposed to prepare the profit and loss account and we are supposed to prepare the balance sheet. So we'll not directly start with the balance sheet, but we will start from the profit and loss account and then we will move ahead with the balance sheet. So sales. So how does your profit and loss account looks like? The format goes ahead like this. So the statement of profit and loss account, you will start with income, okay, revenue from operation, basically your sales, minus your sales returns. Then you have your revenue from operations, which is gross, minus your excise duty if anything is there. Then you get your revenue from operation, which is net. When you minus your excise duty, you get the net figure. Then if there are other incomes, you add that and you get your total revenue from operations. This is your revenue column. Moving on to your expenses column, your expenses will start with purchases of stock in trade. If any purchases has happened during the year, so purchases of stock in trade. Then you will have your change in inventories. Change in inventory is nothing but opening inventory minus your closing inventory. Okay, then we have something called as employee benefit expenses, wherein you will have a working note for it, which is nothing but working note number 11, employee benefit expenses. All the expenses which are made by the employee for the employee, like your wages, salaries, everything will come into this picture. Then you have your finance costs, the costs related in raising the finances. So all that will come under your finance cost, which is working note number 12. Then you have your depreciation and amortization expenses. So you will show your depreciation expenses and your amortization of your assets separately. Only those expenses which will be showed in your working note number 13, and whichever doesn't fall under the three categories, which are the expenses which are given, which does not fall under the three categories, will fall under other expenses, like your power and fuel, preliminary expenses, written off, freight, etc. All such expenses will fall under other expenses. Then you will total up your expenses. Then you will get something called as profit before tax. How will you get your profit before tax? Total revenue from operation minus your total expenses. You get your profit before tax minus your your profit before tax minus your tax expenses. So all your tax expenses will be minus. Then you get something called as the profit for the year. Okay, so this profit will be considered in your balance sheet. So this is basically the format of statement of profit and loss account. So first let us look into our question. So sales will come under your revenue from operation, which is your statement of profit and loss account. General reserve will be taken in your balance sheet working note. Opening inventory. So if you see, we have the opening inventories in which is given in your trial balance. And if you go to your adjustment, we have something called as closing inventories, which is 28,880. They have given in your working notes, which is your adjustment. If they have given in your adjustment, the basic concept that everybody understand it, it will come in two places. Okay, either in your working notes and balance sheet or in your statement of profit and loss account and in your balance sheet. So it basically needs to appear in two places. So if you see, closing inventories is given, opening inventories is given. So opening inventories minus closing inventories will be taken as changes in inventories in your statement of profit and loss account, and this closing inventory again will be considered in your balance sheet under your current asset. Okay, so moving on to our next item, which is trade payables. Trade payables will be taken in your balance sheet. Purchase of goods, which is your statement of profit and loss account under your expenses. Depreciation on tangible asset. Depreciation on tangible asset will basically be taken under your depreciation and amortization expenses. Okay, next is your trade receivables, so it will be considered in your balance sheet. Salary expenses, so if you see salary expenses is an expense which is made by the employer for the employee, so it comes under your employee benefit expenses under your statement of profit and loss account. Next is your provision for bad and doubtful debts. Provision for your bad and doubtful debts, so if you see, it is the last year provision for bad and doubtful debts, which will be minus from your bad debts. Okay, there is a current year provision for bad and doubtful debts also. We'll consider that in a different way. Cash and cash equivalents will come under your balance sheet. Tangible asset, balance sheet. Freight is nothing but your other expenses, which is in your statement of profit and loss account. Amortization on tangible asset is your depreciation and amortization expenses in your profit and loss account. Sundry expenses is also another expense. Share capital, which will be considered in your balance sheet. Profit and loss account 7,000, which is a credit balance, you consider it to be a surplus, which will be taken in your reserves and surplus. Preliminary expenses basically is a other non-current asset. Power and fuel, which is your other expenses under your statement of profit and loss account. Bad debts, which will be basically taken in your statement of profit and loss account under your other expenses. Intangible asset is your balance sheet. So if you see, we are moving on to the adjustment. Closing inventories, as I told you all earlier, first we will consider it in your statement of profit and loss account as opening inventories minus closing inventories is equal to changes in inventories, and then we will consider the closing inventories as your current asset in your balance sheet. Your second adjustment, they have given create provision for taxation at 30%. So they have told create provision for taxation at 30%. I will show to you all how it basically works. So in your statement of profit and loss account, you will basically take the current asset, which is 30% of 1,740,000, which we get 30,222. So this will be first considered in your profit and loss account, and this 30,222 will be taken as your short term provision in your under your short term provision, which is your provision for taxation 30,222. That's how we will consider. You're supposed to calculate the amount. Okay, so the third point which they have given is write off 1/5 of preliminary expenses. So that is your preliminary expenses written off. So if you see, the preliminary expenses amount is 20,000. So 20,000 into 1/5 is you get 4,000 as your amount. So this 4,000 will be taken under your other expenses and will be minused from your preliminary expenses in your other non-current asset. Your fourth adjustment is directors proposed dividend at 15%. So you're supposed to calculate your 15% of your proposed dividend. So your proposed dividend, if you see, what is your share capital amount? 2,50,000. 2,50,000 into 15%. which is 37,500 is nothing but your proposed dividend. So this 37,500 will be taken under your short term provision and will be taken as an appropriation in your reserves and surplus. So the next point is write off rupees 2,500 as bad debts and maintain provision for bad and doubtful debts at 10% on debtors. So write off 2,500 as the further bad debts and maintain provision for doubtful debts at 10% on debtors. I'll basically show this working note how they have calculated it. So if you see in other expenses, you take your bad debts of the which is given in your trial balance 3,500. You add your further bad debts which is given in your adjustment 2,500. You add your provision for doubtful and bad debts. How will you calculate provision for bad and doubtful debts is you have your trade receivables which is given in your question as 85,000. So if you see 85,000 is your trade receivables minus your further bad debts which is 2,500. So 85,000 minus 2,500 which you get 82,500 into 10% which is 8,250. I again repeat, trade receivable which is nothing but your debtors. Okay, so minus your further bad debts which they have given in the question, so you get 82,250. So 82,250 into 10% is your provision for bad and doubtful debts. So 8,250 is your provision for bad and doubtful debts. You add it and you minus your opening provision for bad and doubtful debts which is given in your trial balance, okay, which is 5,000. So the balance you get to be 9,250 which is nothing but considered in your other expenses, and this adjustment which they have given the further bad debts and provision for bad and doubtful debts will be minus from your trade receivables. Simple as that. Moving on to your next adjustment which is right. We finished all the adjustments, so let's start with our working notes. So first we'll start with statement of profit and loss account for the year ended March 31st 2016. Income, you have revenue from operations 6,54,000 less your returns revenue from operation which is your gross, okay, 6,54,000. You bring it back minus your excise duty, then you get your revenue from operation which is a net figure which is 6,54,000. Then you have your other incomes, we don't have any other incomes, so you bring back the same amount which is nothing but our total revenue from operation. Moving on to our expenses side which is purchase of stock in trade 2,32,080. Changes in inventory is nothing but opening inventory minus your closing inventory 29,520. Okay, then moving on to our working notes. So we'll look into our 11, 12, 13, 14 working notes. So employee benefit wages, in your question we have salary and wages 98,470. Finance cost we do not have anything. Depreciation and amortization expenses, depreciation on tangible assets we have 15,500 and amortization expenses we have 18,500. So total is 34,000. Other expenses, freight is 48,880. Sundry expenses 42,860. Power fuel is 54,200. Preliminary expenses written off is 4,000. So your bad debts you have 3,500. Add your further bad debts 2,500. Add your provision for bad and doubtful debts 8,250 minus your opening provision for bad and doubtful debts 5,000. So total it comes up to 9,250. The total of your other expenses is 1,59,190. You take it as it is. So employee benefit expenses, working note number 11, 98,470. Finance cost, we do not have anything. Depreciation and amortization expenses, working note number 13, which is 34,000. Other expenses, working note number 14, which is 1,59,190. So your total expenses, you have 5,53,260. So total revenue minus total expenses, profit before taxes 1,07,40 minus your tax expenses, which is your current tax 30,222. Profit for the year is 70,518. Okay. Now we'll start up with our working note for the balance sheet. So equity share capital of rupees 10 each of 2,500 shares, which is 2,50,000. So nothing else we have, which is 2,50,000. So since in the question, if you see, they have given equity shares value is 2,50,000 equity shares of rupees 100 each. So let's find out how many equity shares are there. If they give like that, basically you're supposed to do 2,50,000 divided by 100, you get 2,500 shares. Now moving on to the reserves and surplus. General reserve 12,000. Add your transfers, if anything is there to your reserves, nothing is there, so your closing balance is 12,000. Now let's look into this next part, which is surplus. Opening balance of surplus is 7,000. Add the surplus from the statement of profit and loss account, which we found out from the statement of profit and loss account, which is 70,518. Total you get 77,580. Now we will minus all the appropriation. The proposed dividend is 37,500. Then we have your DDT at rupees 16.995%. So this DDT is basically calculated on your proposed dividend. So 37,500 into 16.995% is 6,373. So the total amount transferred to general reserve, we do not have anything. So the appropriation total is 43,873. So your closing balance is 33,645. So 12,000 plus 12,000 is your closing balance of reserves, plus your closing balance of surplus is 33,645. Total you get 45,645. This is, they've calculated it wrong. The correct amount is 45,645. Moving on to long term borrowings, nothing is there. Short term borrowings, nothing is there. Other current liability, we do not have anything. Short term provision, we have the proposed dividend 37,500 and dividend distribution tax, which is 6,373, which we calculated here. Provision for taxation is 30,222. I have told how everything is calculated, so directly I am going. Next we have fixed assets. They have not deducted any depreciation, so let's see the depreciation and the net block. So fixed asset, tangible asset, we have 1,55,000. Depreciation they have not told, so net block is 1,55,000. Intangible asset 86,000. Depreciation I have not told, So net block is 86,000. So you total it up, you get to a 2,41,000. Other non-current asset preliminary expenses is 20,000 minus your return off of preliminary expenses, which is 1/5. 20,000 into 1/5, which is 4,000, which you get 16,000. Trade receivables is 85,000 minus your further bad debts 2,500 minus your provision for bad and doubtful debts 85 minus 2,500, 82,250 into 10% is 8,250. So if you total it up, you get 10,750. Trade receivables minus it, you get 74,250. Cash and cash equivalents, we have 35,500. Short term loans and advances is nil. The rest all we finished in the profit and loss account. So if you look into the balance sheet, Nishi Trading Company Limited balance sheet as on March 31st, 2016. Equity and liability, shareholders fund, share capital, working note number 1, 2,50,000. Reserves and surplus, working note number 2, 45,645. Non-current liability, under that we have long-term borrowings, working note number 3, nil. Current liability, we have short-term borrowings, working note number 4, nil. Trade payables, directly we will take the amount, which is your creditors 25,890. Other current liabilities, working note number 5, which we have nothing. Short term provision is working note number 6, 74,095. So in total you get 3,95,630. Moving on to our asset side, non current asset, we have a fixed asset, working note number 7, which is tangible asset 1,55,000, intangible asset 86,000. Non-current investment, working note number 7, which is 16,000. Current asset, working inventories, we do not have a working note, 28,880. Trade receivables is working note number 8, 74,250. Cash and cash equivalents, working note number 9, 35,500. Short term loans and advances, working note number 10, nil. So you get your balance sheet to be tallied was 3,95,003,630. Moving on to our next sum, which is from the following try balance, prepare final accounts of MAS Trading Company Limited for the accounting period 1st March 2016. So your share capital is 3 lakhs, securities premium is 60,000, which will come under your reserves and surplus. General reserve 12,500 under your reserves and surplus. You have your surplus amount, which is 35,000. So reserves and surplus, 15% debentures, long term borrowings. Interest on debentures is basically a finance cost. It is a cost incurred in raising your capital. So it will come under your finance cost in your statement of profit and loss account. Trade receivables and trade payables respectively. You have your provision for taxation. Then you have your advances received from customers. The provision for taxation is your short term provision. Advance received from customers is your other current liability. Then you have your data processing equipment, which is a tangible asset, plant and machinery, tangible asset, patents and copyrights, which is intangible asset, inventory, stock, cash and bank balances, your cash. Advance paid to supplier is your other current asset. Sorry, it is a short term loans and advances, so it is advance paid to suppliers. Purchases and sales, you will take it in your profit and loss account respectively. Salary and wages is nothing but your employee benefit schemes. Contribution to PF and other funds is also employee benefit schemes. ESI expenses, employee benefit expenses. ESI payable, employee benefit expenses. All this will come under your employee benefit expenses in your profit and loss account. Your rent expenses will be your other expenses. Advertisement and sales promotion expenses will come under your other expenses. Traveling expense will come under your other expense. So testing fee is also another expense. Commission received, if you say it's a commission received, it's a other income in your statement of profit and loss account. So let's look into the adjustments. Closing inventories, you will take it in your statement of profit and loss account, and you'll find out your changes in inventories. Prepaid advertisement is being prepaid, so before the due date you pay the advertisement expenses, so that will be minused in your advertisement expenses under your other expenses, and it will be taken in your short term loans and advances. Then we have write off one one fifth of the patents and copyrights, and provide depreciation at 10% on data processing equipment and 15% on plant and machinery. So basically this is your depreciation and amortization expenses, so you calculate respectively on those amounts. So provision for taxation is 30%, so this you will basically take in your statement of profit and loss account and under your short term provision. Directors proposed a dividend of 5%. So 3 lakh into 5%. 3 lakh is nothing but your share capital amount. 3 lakh into 5%, 15,000. So 15,000 is nothing but your proposed dividend, which you will take it in your short term provision, and you will minus from your appropriation under your reserves and surpluses. So let's start out with our statement of profit and loss account. You start with income. Revenue from operations is nothing but your sales, 8,70,000, minus your returns. Then you have your revenue from operation gross, bring back the amount, 8,70,000, minus your excise duty, nothing you have. So again you have your revenue from operation net, which is 8,70,000. Your other income is 19,000, so your total revenue from operation is 8,89,000. Okay, this other income is nothing but your commission received. Next you have your expenses. Your purchases of stock in trade, which is 4,50,000. Changes in inventories, opening inventories minus closing inventories is 46,500. Employee benefit expenses, so we'll look into the working notes. Employee benefit expenses, salary and wages is 95,000. Contribution to provident fund and other funds is 11,400. ESI expenses is 4,500. Total you get 1,10,900. Then you have your finance cost, interest on debentures is 18,750. Then you have depreciation and amortization expenses. Depreciation on tangible asset is 37,568, and depreciation on intangible asset is 35,000. How do you basically calculate here is, go to your fixed asset. First prepare this account, tangible assets. You have your data processing equipment, 1,59,000. Depreciation they have told 15,900. How did you get this 15,900 is, so basically how much have they told the percentage of depreciation. So 1 second. So they have told patent and copyrights is 1/5. So first we'll start with data processing equipment is 10%. So 1,59,000 into 10% is 15,900. Plant and machinery, the percentage of depreciation is 15%. So 1,44,450 into 15%, which is 21,667. So total of your depreciation under your tangible asset is 37,568, and your intangible asset, patent and copyrights, is 1,75,000. On that, 1/5 percentage is 35,000. So your total of your depreciation on tangible asset is 37,568, and depreciation on intangible asset is 35,000. Other expenses, you have rent expenses 45,000, advertisement and sales promotion expenses we have 55,000, less your paid advertisement which is given in adjustment, which is 25,000, you get 30,000. Traveling expenses 39,800. Testing fee is 45,900. Total you get 1,60,700. Moving on to your statement of profit and loss account, employee benefit expenses, working note number 11, 1,10,900. Finance cost, working note number 12, 18,750. Depreciation and amortization expense, working note number 13, 72,568. Other expenses, working note number 14, 1,60,700. So your total expenses is equal to 8,59,418. So your profit before tax is 29,583. So minus your tax expenses 8,875. Profit for the year is 20,718. Now we'll move on to the working notes of the balance sheet. Share capital, equity share capital of 10 rupees each of 30,000 shares, which is 3 lakh. Reserves and surplus, under your reserves and surplus they have given securities premium, which is 60,000. Add any additions, closing balance is 60,000. Moving on to your general reserve, 12,500. Add any transfers, so there are no transfers, you bring down your closing balance 12,500. Moving on to your surplus, opening balance of surplus is 35,000. Add the surplus from the statement of profit and loss account, 20,708. Okay, now you get a total of 55,708. Now you look into the appropriations, so less any appropriations. So your proposed dividend is 15,000 and your DDT is 2,549, which is nothing but 16.649 into 15,000. And your closing balance, you get it up to be 38,158. How do you get this? 55,708 minus 17,549. It's 38,158. So this 38,158 plus your 12,500 plus your 60,000, you get it up to be 1,10,659 as your total reserve. Long-term borrowings, your 15% debentures 1,25,000. Then you move on to your short-term borrowings, there is no short-term borrowings. Then your other current liability, advances received from customers 14,500. ESI payable, which is 2,500, we'll consider it here also, which you are supposed to pay. Then we have your short-term provisions, which is 49,000. Add your current year provision 8,875, which is 57,875. Your proposed dividend is 15,000. Your DDT is 2,545. Your fixed assets, cross block minus your depreciation, you get your net block. Trade receivables is 95,000. Cash and cash equivalents is 35,700. Short-term loans and advances, under that you have your balance paid to supply 75,000 and prepaid advertisement expenses 25,000. So let's move on to our balance sheet. So under you have your equity and liability, you have your shareholders fund, share capital, working note number 1 3 lakh, reserves and surplus working note number 2 1,10,659, non-current liabilities working note number 3 1,25,000, current liability you have your short-term borrowings working note number 4, nothing is there. Trade payables 59,000, other current liabilities working note number 5 17,000, short term provision working note number 6 75,424. So total you get 6,87,083. Asset side we have a non current asset, fixed assets, we have a tangible asset 2,65,883, intangible asset is 1,40,000. Under your current asset we have inventories 48,500, trade receivables working note number 8 95,000, cash and cash equivalents is working note number 9 37,700, and short term loans and advances working note number 10 1 lakh. You get your balance sheet tallied with 6,87,083. Thank you everyone.